Hello again. This is Jose de la Torre, and I am here to bring you the keynote speaker for today, which is a great privilege for us to have. And we're delighted that Mauro Guillen was able to join us for this session. I'd like to introduce Mauro briefly, although you have his vita in the screen or in the system. Mauro, I've known him for over 30 years, and he is certainly one of the most exciting intellectual thinkers in the field of international business that I have met in all of those years. Mauro spent most of his career at the Wharton School in the University of Pennsylvania, where he was a leading professor there and the man and the sort of the head of the Lauder Institute, which is the international uh, uh, institute that runs a number of programs for the Wharton School. He has taught in many of the programs, in the advanced management programs, in the executive programs, and beginning this September, he has moved to Cambridge in the UK to become the dean of the Judge Business School at the Cambridge University. In that way, he has sort of circled back to Europe, where he was born. He was born in Spain. He then went to school in both Spain and in the US, where he graduated with a PhD in sociology from Yale University before joining the faculty at the Wharton School. Uh, one of his achievements are just too many to name here in terms of all of his major uh, publications and awards that he has received. But perhaps the one I would like to point out is his most recent book, which is called 2030: How Today's Biggest Trends Will Collide and Reshape the Future of Everything. And it was that book that led me to say, Mauro, why don't you open the session today? Even though the book was written just before the pandemic, it sort of predicted a lot of the trends that have been accelerated by the pandemic. So I'm sure we'll hear more of that from Mauro. Without further ado, let me just simply welcome Mauro to the screen and to the program, and ask you to go ahead and present your views to us, and we'll have questions at the end. And the audience, please do put your questions on the chat, and I will be handing them to Mauro to answer at the end of his presentation. Thank you so much, and welcome again, Mauro, to our consortium.
Oh, thank you so much, Jose, and thank you, David, for inviting me to be today here with you. This is truly an honor for me. I'm speaking from my home in Cambridge, in the UK, and it's just wonderful to be able to reach such a global audience because your consortium, of course, covers the world in a way that no other similar entity does. So I'm really, really happy to be here today. And I'm happy, especially because the topic of my presentation is about where the world is going in terms of consumer markets, in terms of financial markets, and therefore, what is it that companies, I think, need to anticipate, need to be aware of? My time horizon is going to be the next 9 years or so until the end of this decade. And as Jose said, I would like to involve you in this conversation. I would like you to enter your comments or your questions in the appropriate part of the website, and to field your questions later on, and hopefully also to continue this conversation over LinkedIn or some other social network later on. So I think the business landscape is changing very, very, very quickly. And it's changing driven by a number of trends that I'm going to tell you about in a moment. And it's changing because there are huge transformations going on in the world. So in all of my research, whenever I speak about this topic, I always try to focus the attention on three types of trends, okay? So number one is population trends, because at the end of the day, every consumer market, every financial market, every company needs to think about who are the customers, who are the workers or potential workers. So population trends are extremely important to understand if businesses want to be successful. The second trend involves the economy, and in particular, of course, the most important change that we're going through, which is the rise of emerging markets, but in ways that I don't think we had been anticipating before the pandemic or 10 or 20 years ago. And then the third type of trend is technological trends, is technological change. So please advance one slide now. What I think is really, really important for us, next slide, please, for us to consider as we think about these three trends, population trends, emerging market trends, and technological trends, is that we need to engage in what's called lateral thinking. That is to say, taking into consideration each of the trends in isolation of the others won't do the trick. That's not going to enable you to see the future. That's not going to enable you to understand where things are going. What is really important is to connect the dots, to see how those trends are interrelated, how they converge to create a very different business landscape moving forward. And in so doing, we will be able then to identify some really important unanticipated effects. Next slide, please. So I would like to essentially take with you 3 steps today in terms of our analysis of all of these changes in the world and in the business landscape. The first will be to take a look at population trends. So we're literally going to be following the babies into the future. Following the baby, because those babies that were born in the last 10 or 20 years, the ones that will be born in the next 10 years, are going to be the customers of the future. They're going to be the workers of the future. Second step is multiply those numbers of babies by how much money they have in their pockets. And that's going to give us a much better approximation to the future of consumer financial markets and to the new opportunities for companies. And then we're going to be examining the implications. So next step, next slide is our first step. Please advance one slide. Follow the babies. So once again, the babies are going to be the consumers and the workers of the future. One more slide. The single most important thing that we have to take into consideration is something that you all know very well, but I want to walk you through the implications. The fact that we all know is that the number of babies is dropping, has been dropping for quite some time now, but it is dropping at very different speeds depending on the part of the world. So the chart that you see on the screen begins on the left in the year 1950. It goes to the end of 2020 with actual data, and then the rest are forecasts into the future. Vertically, we're measuring the total fertility rate, the number of babies born to each woman over her lifetime. And as you can see, it's dropping everywhere in the world. Now, it's dropping from a very high level in the least developed parts of the world. That's the dotted line at the top of the chart, the one that starts at a level of 7 or so. Well, that includes sub-Saharan Africa, parts of the Middle East, parts of South Asia. The number of babies is also dropping in the next group of countries, the thin line, the one that starts, I believe, at a level of about 6. And that's China, India, Thailand, Indonesia, Turkey, Brazil, Mexico, and so on. And for the longest time, the number of babies had also been dropping in the most developed parts of the world, which is the line at the bottom. That's the line for the US, for Europe, for Japan, for Australia, for Canada, all of the more developed parts of the world. Well, but there's something surprising about this chart that I really want to bring to your attention because I think it's going to have important implications for the future. As you can appreciate, the line at the bottom for the more developed parts of the world, beginning in the year 2000, it no longer declines. It's actually a slight increase since the year 2000 that has been taking place for the last 20 years and is projected to continue for the next 20 or 30 years. So what's going on? The number of babies estimated over a woman's lifetime, that's the total fertility rate, since the year 2000 has been growing, especially in the United States and some European countries like France. Well, that's the effect of immigration. Immigrant families, this is just a fact, they tend to have more children. Now, this is important for the future because the composition especially of the younger age group of consumers and workers, is going to change as a result of this. Let's advance one more slide. So in all of these discussions about children and about babies, of course, China figures very prominently. China is a very important country in the world, not just because its economy has been growing very fast and it's becoming a technology leader, but also because the population is very large. And the big question is, okay, is the trend, the downward trend in the number of babies in emerging markets going to continue, and especially in China, after the removal of certain government policies that were restricting the number of children? And I'm referring, of course, to the one-child policy. Well, as you know, 5 years ago, the Chinese government relaxed that policy. And since then, there was a two-child policy in place. And just that 2 or 3 months ago, they further relaxed that policy. And now it's a 3-child policy in China. So as you can see, after the introduction of the one-child policy back in the year 1979, the number of children in both rural China, which is the line at the top, and urban China, which is one of the lines at the bottom of the chart, continued to go down. But the question is, big question for the future, what's going to happen next? What's going to happen? And why does this matter? Well, it matters because the size and the dynamism of the Chinese market will be dependent on that number of children in China. But not only that, for example, the savings rate in China will also be affected. If the population gets old very fast in China with very few babies, then savings rate in China is going to go down. As a result of that, then some countries outside of China, such as the United States, for example, may find it more difficult to finance their deficits because we have been relying on Chinese savings for the last 30 years. So what's going to happen? Please advance one slide. Well, most people believe that the number of children in China is going to go down as a result of the relaxation of the one-child policy. But let me just give you a few more numbers to see if that's really the most likely future scenario. Please advance one bullet point. So China right now, the number of children per baby using the total fertility rate is 1.7. Click once again, please. The second bullet point here that I want to give you is in Taiwan, as we speak also today, the number is 1.2 babies per woman. And if you click once again, please, in South Korea is 1.1. And please click once again. I should perhaps remind you, but I'm sure you all know, that neither Taiwan nor South Korea really ever had a one-child policy. So what's the implication here? I don't know of any expert on China, of any population expert in general, who says that the number of babies in China is going to increase, even as a result of the relaxation of the one-child policy. In fact, because women continue to access the labor force, because they have better educational credentials, they postpone having their first babies. People move from the countryside to the city. All of these changes will continue in China in the near future, and they will further bring the number of babies down. So that's what we should be expecting. Let's go to the next slide, please. Now, the really important thing to keep in mind here, now, advance one more slide again, please. And one more. One more. The other side of the coin here, in terms of understanding the future of consumer and financial markets, is not just how many babies are born, but also how long are we expecting them to live. And well, from that perspective, there's also an important change going on in the world, one that I'm sure you're very familiar with, which is that as time goes by, babies who are born are living longer than babies born in previous years. In other words, life expectancy at birth is growing. So on the chart, we start again in the year 1950. On the left, we go to the year 2020 with actual data, more or less around the center of the chart. And then if you keep on going towards the right, then you have projections into the future. Very clearly measuring life expectancy at birth in years. Now, in addition to the fact that this number is growing everywhere in the world, it's growing in the least developed parts of the world, it's growing in the emerging markets, which once again is a thin line, and it's growing in the most developed parts of the world. There's another aspect of this that I want to bring to your attention, which is that the poorest parts of the world are catching up very quickly. Look at the chart in the year 1950, all the way to the left. You will notice that the difference in life expectancy for a baby born in a rich country and a baby born at that time in a poor country was 30 years, 30 years. Now, fast forward to the present time, around the middle of the chart, the year 2020. The difference is already down to half that much, 15 years. A baby today born in a rich country has 15 years more of life expectancy than a baby born in a poor country on average. And as you can see, this convergence will continue into the future. Now, hold on to that fact as well. That's really important for the future because once again, in those parts of the world, not only the number of babies is greater, but also those babies are catching up in terms of their life expectancy fast, really, really fast. So if we put together these two forces, number of babies, and then how long those babies are expected to live, and we make projections into the future, we can calculate the size of populations in different parts of the world. All we need to do in addition to that is to hold migration constant, okay? So if you advance one slide, I produced the first version of the chart that you see on the screen right now about 7 years ago when I started doing research on this topic. And when I first saw the chart on my computer, I thought I had made a mistake. I couldn't believe it. But the chart was accurate. And here what you see right now is the chart with the latest available information. So once again, we begin in the year 1950 on the left. We go to the year 2020 with actual data that's roughly speaking at the center of the chart. And if you keep going towards the right, then you're moving into the future with projections. I drew a line for the year 2028, and I'll explain in a moment why. Vertically, what we're measuring is what percentage of the world's population is in different parts of the world. And look at the big changes that are going to happen between now, the year 2021, and the year 2028. And I should say the title of my book is 2030, because prior to the pandemic, the curves that you see on the chart for the different parts of the world would cross each other in the year 2030. But the pandemic has accelerated these changes in population. And now they're going to be crossing each other, as Jose said a little bit earlier. The pandemic has accelerated these trends. So they're crossing each other in the year 2028. And look, by that year, Africa, which used to be tiny in the year 1950 in terms of population, by the year 2028, Africa is going to become the second biggest region in the world, becoming bigger than East Asia, which includes China, of course, as well as Japan and South Korea and so on, for the first time. Now, also that year, South Central Asia, which includes India, is going to level off. It's going to reach a maximum as a percentage of global population. Why? Well, in India, there's still a relatively high number of babies per woman being born. However, that number is growing. It's dropping. It's declining also in India. And also by that year, the year 2028, Europe, my region of origin, which used to be the number 2 in population in the year 1950, by the year 2028, Europe will fall to place number 5 or even number 6. Now, you may be wondering, where is the United States? Where's the Middle East? Where's Latin America and all of this? Well, you can find the curves at the bottom of the chart. No dramatic changes there. Yes, a decline in the population in the US as a percentage of the world's total, also Latin America, not the Middle East. The Middle East, it will be growing. But the big changes, once again, are Africa and South Central Asia on the increase, and East Asia and Europe on the decline. So what we're seeing is a shift in the center of gravity of population in the world, away from East Asia, away from Europe, and towards South Asia and Africa. And this is going to fundamentally reshape a number of things. Please advance one slide. Now, don't think that Africa is going to be a disaster because of all that population growth. Not at all. To begin with, Africa is a very big place. Look at how many countries fit into Africa's landmass. Now, you might be thinking, well, there's deserts in Africa. Well, there's also deserts in North America, in China, in India, and so on. So what's important here to keep in mind is that Africa, even with that population growth, will never have more people per square mile or square kilometer as Japan or India or China or Europe or even the United States. Please advance one more slide. And the other really important thing to keep in mind about Africa is that it is not a basket case anymore. It is not a backward part of the world. That's an impression that I think we have inherited from times past. Africa is right now at the forefront in terms of the implementation of certain kinds of technologies. Look at, for example, mobile money. As of 2 years ago, there were more registered accounts, active accounts, more transactions, and more transaction volume when it came to the electronic transfer of money in Africa, specifically in sub-Saharan Africa, than in any other region in the world. Well, of course, out of necessity, because they never developed a banking infrastructure. There's no ATMs in the countryside in Africa, and 70% of the population still lives in small villages. But Africa has found growth, has found opportunity in new technology. They've also pioneered telemedicine. Before, for example, in the United States or in Europe, we started to use it in the wake of the pandemic out of necessity as well. So Africa is not a backward part of the world. Africa, of course, has a long way to go, but they're using technology. The middle class is growing, as we shall see later. Cities are starting to grow. Agriculture is becoming more productive. I'm actually very optimistic about Africa. But you see, besides different regions or geographies in the world, there's another way of looking at these changes in population trends. Please advance one slide. Let's take a look first at the young age group of consumers and employees. But let me focus on consumers. Look, the population between ages 15 and 35 is going to increase in some countries like India or Nigeria. So what you have on the table is how many millions of people between the ages of 15 and 35 there are or there were as of the end of 2020 in the largest countries in the world. And you have the projection for the year 2030, how many people will be between the ages of 15 and 35. And well, as you can see, what is going on is that, as I said, in places like India or Nigeria, it's growing. In places like China, it's going to be declining. Look at China. They're going to have 60 million fewer people between the ages of 15 and 35. Now, this is very important for companies to take into account, because that is not to say that the consumer market in China will not be attractive, but certainly it will be a different one than today, with fewer people in that younger age group, but people with more money, as we shall see later. And then there's a third type of country on the table. That's the United States. It's the third country on the table. As you can see, in the US, the number of people between the ages of 15 and 35 at the end of 2020 was roughly the same as the number of projected people in the same age group in the year 2030. But that doesn't mean nothing will change in the US, because you see, that group of young people in the US in the year 2030 is going to be more diverse because of the effect of immigration, and also because of the effect of the fact that minority groups in the United States, the so-called minority groups, tend to have more children. So much so that the US Bureau of the Census predicts that in the United States, which is still the largest consumer market in the world, by the year 2030, more than half of those people between the ages of 15 and 35 are going to be members of what today we call minority groups: African Americans, Asian Americans, and Latins. Big change because those groups, for example, marry at an earlier age on average. Adjusting for purchasing power, they're more likely to buy a car or buy a home. And they use digital platforms more frequently than the mainstream of the population. So the change in the makeup, in the composition of that age group means that in the future, you should expect different kinds of behavior of those people as consumers. Really important changes. But if we continue the presentation, please, next slide. I just want to summarize then what I just told you about this group. So there will be countries in which it's going to grow, like India and Nigeria. Countries in which it's going to stagnate, like the US, but once again, minority groups are going to become more numerous, in fact, becoming more than 50% of that age group. And then finally, countries in which it's going to decline, such as China, Japan, Brazil, and so on. Next slide, please. Now let's go to the other end of the age distribution, the population above age 60. So unlike in the younger age group, in this case, every country in the world, no exceptions, is going to have more people above the age of 60. So much so, and listen to this carefully, by the year 2030, the biggest segment of the consumer market in the world, defined by age, is going to be the population above age 60 for the first time ever. Now, that's important because so far, most brands, most companies have been paying attention, for the most part, to consumers in their 20s or their 30s, perhaps in their 40s. But moving forward, companies that don't know how to sell, that don't appeal to consumers above the age of 60, are going to lose. They're not going to be able to be as profitable. Things are changing very quickly. And by the way, most of the wealth of the net worth in the world is owned by people above the age of 60. In the United States, 80% of the net worth is owned by people above the age of 60. Now, of course, I'm not saying that everybody in that age group is rich, not at all, because wealth, of course, is very unevenly distributed. But they have purchasing power. So think about the industries that are going to grow as a result of this. It's not just healthcare and pharmaceuticals and home care. It's also leisure and entertainment. It's also travel, perhaps. It's home robotics. Companies that sell goods and services that appeal to the population above the age of 60 are going to do really, really well. Next slide, please. But there's another change in the making, and I want to show you now how lateral thinking works. Remember, it's all about putting together, connecting the dots across different kinds of trends. So if you remember, for the longest time, perhaps 150 years or so, we have been organizing our lives in terms of what I call the sequential model, meaning first we study when we're young, then we work, and then we retire. Well, I think that model is coming under stress for a number of reasons, but especially because of three trends. One is we're living longer. We've already covered this. Lifespan is growing. Somebody who celebrates his or her 60th birthday today is expected to live another 24 years in the United States. The number may be slightly different in different parts of the world, but that's another lifetime. 24 years is another lifetime. Now, not only that, the health span is also growing. That is to say, somebody who today celebrates the 60th birthday is in much better physical and mental shape on average than somebody celebrating the same birthday 20 or 30 or 50 years ago. And then the third trend that I want you to consider jointly, technological change. Technological change is making knowledge obsolete or antiquated much faster. So what's my prediction based on those three interrelated trends? I think in the future, we're going to go back to school several times during our lifetime. I think when people turn 40, they're going to realize that whatever it is that they learn at school is no longer as useful because of technological change. So they'll go back to school, probably using a digital platform such as the one that we're using now. And then they will go back to work. And when they celebrate their 60th birthday, they're going to realize that they don't have enough money in their pension fund because, on average, they're expected to live another 24 years. So they will want to continue working, but then they will realize that whatever it is that they learned at age 40 no longer is useful or as useful as in the past. So they go back to school. Now, an even bolder prediction on my part, and I'd like your reaction later on to this. If people go back to school several times, there's nothing preventing them from switching careers, switching professions, switching occupations. So we're going to see a lot more of this, I think, in the near future. Please advance one slide. Another really important change, of course, in this case, absolutely magnified by the pandemic, is the phenomenon of remote work. But I want to make a connection here to something that was going on before the pandemic, the phenomenon of offshoring. So I think remote work, after 18 months of going through this big experiment, now we all feel we understand the good things and the bad things about it. We have learned about how to work remotely. And so have companies. And I think in the future, companies will identify jobs that perhaps will be performed on a remote basis and others that will be performed on a hybrid basis. But for those that are performed on a remote basis, they will feel that they can hire anybody around the world without having to ask that person to move to where the company is. In other words, I think we may be seeing the beginning of a truly global market for talent. For example, nothing preventing a company that needs another expert for their marketing team from advertising globally, perhaps finding the right candidate in Singapore and not asking that person to move to the United States where the company is located, but rather telling that person, if you're willing to work during the night, you can actually stay in Singapore and work remotely for us. Now, the consequences of this, I think some workers with highly specialized skills will benefit from this trend. I think other workers whose jobs can be easily performed by other people from a remote location will suffer. So, as always, technological change generates winners and losers. And of course, politically, we better take care of the losers. Otherwise, we're going to get more political tensions and frictions. Happy, again, to entertain your questions later during the Q&A segment. Next slide, please. So I've been telling you about numbers of people. Next slide. Let's now think about how this translates into actual purchasing power in consumer and financial markets. Well, here the story is relatively old. That is to say, emerging markets are growing, so much so that by the year 2030, that's what you see on the chart towards the right, the combined purchasing power of the middle class in India, in China, in the rest of East Asia, even excluding Japan, will be more than half of the world's total. In other words, China will by that point become or have become the biggest consumer market in the world for middle class consumption, becoming bigger than the US, bigger than the European Union for the first time. Next slide, please. Now, something really important that I want to bring to your attention. If you continue with this forecasting exercise to the year 2050, which of course involves risks, because the year 2050 is, well, 29 years away, then something really important happens around the year 2040, which is that, as you can see on the chart, by the year 2040, India becomes a bigger market for middle-class consumption than China. When I show this chart, people push back and they tell me, you've got to be wrong. China is going to be the number one at everything. And I push back as well. And I say, I don't think so. Look, there are more babies being born in India. So therefore, the Indian population will be bigger by the year 2040. Not only that, it will be younger. And the big differences in consumption happen not in the consumption of non-durable goods and services, but rather durable goods, such as homes, automobiles, appliances for the home. More young people in India means there's going to be more people looking for a home, more people buying a car, more people buying appliances than in other markets in the world, especially China. So while China will be the largest economy in the world, it won't be the largest consumer market. And remember, the economy, the total economy, includes not just the domestic consumer market, but also exports and investment. So China, no doubt, will have greater exports and greater investment numbers than India. But the consumer market, by the year 2040, I think the Indian one will be bigger. So that's why I always tell companies, I'm sure you have a China strategy, but get ready. You better have an India strategy, because the consumer market in India is going to be the largest in the world by the year 2040. Next slide, please. You may be wondering, where is Africa in all of this? So here I'm giving you the exact numbers in billions of US dollars for each part of the world. And you can see how the consumer market in China and in India is going to grow really, really quickly over the next 10 years. More people are becoming middle class and they're seeing their incomes go up. Sub-Saharan Africa, starting from a very low base, yes, they're going to see a lot of growth. But obviously, we need to wait a little bit longer for the Sub-Saharan African consumer markets to become important in the global context. Next slide, please. Before we leave this segment that has to do with money, I want to also say something about the upper end of the distribution. And I want to present to you data on wealth as opposed to income. So what you see on the slide is the number of people in the world who have a net worth in excess of $1 million. The technical term to refer to them is HNWIs, high net worth individuals. So you have over the last 12 or 13 years the numbers. Well, you can see that this has grown. Since the last global financial crisis in 2008, we now have more than twice as many. We have about 20 million millionaires in the world, high net worth individuals in the world. And if you take a look at the chart carefully, you will see that in every continent, in every region of the world, the number has grown. So certainly we have seen a concentration of wealth towards the top of the income distribution. Next slide, please. Now, we've measured this not in terms of the number of high net worth individuals, but rather how much money, how much wealth, how much net worth they have. We see a similar trend. When you compare the year 2008 for the last financial crisis to the end of 2020, towards the right of the chart, then you see that the wealth of the millionaires of the world has more than doubled. Next slide, please. Now, more interesting is the ranking by country and the fact that now China and India are starting to be among the top countries in the world in terms of the numbers of people in this very exclusive club of the high net worth individuals. Next slide, please. But that's not everything. The other thing is what I told you earlier. Most of the wealth in the world is concentrated in the hands of relatively old people, above the age of 45 especially. So why is that the case? Well, because it takes time, of course, to build up your wealth, and also because you inherit, but you tend to inherit at a later age. Now, the only exception to this pattern is the third bar from the left. That's Asia Pacific excluding Japan. You will notice on the chart that about 41% of the millionaires in that part of the world are below the age of 45. And that's very different from what's going on in other parts of the world. Why is that the case? Because of China primarily. In China, many people in their 20s and their 30s over the last 20 years have made enormous fortunes in real estate, in financial services, in manufacturing, in technology. Next slide. But by far the most important change that is going on is the comparison between men and women when it comes to wealth accumulation. And you see, for the first time, by the end of last year, we had in the world more women who were high net worth individuals than men for the first time. So this was the result of the fact that women have been accumulating wealth faster than men. Why? Well, because they're still not on a par, because there's still discrimination. But in spite of that, we have women accessing education, accessing jobs, accessing careers to a much greater extent than in the past. So they're making their own money. And then, in addition to that, we all know that women tend to live longer than men, about 5 to 6 years, depending on the country. And that also contributes to wealth accumulation by women, because obviously, as a result of that discrepancy in life expectancy, they are more likely to inherit. So, how is this going to be affecting consumer and financial markets? Next slide. Think about all of the research that tells us that men and women behave differently as consumers, as savers, and as investors. There's a ton of survey-based evidence. There's a ton of documentary evidence, for example, from pension funds or patterns of consumption. There's also evidence coming from experiments that have been conducted by economists and by other social scientists in the lab with men and women, giving them tasks. And they find systematic differences between the two. Now, don't think about the stereotypes. You see, the biggest differences when it comes to the consumption behavior by men and women have to do with the fact that women tend to allocate more money to healthcare, education, and insurance. All of those industries have something in common. They're about the future, or they're about your well-being in the future. Once again, education, healthcare, and insurance. Women systematically in virtually every country in the world tend to spend more money in those goods and services. Second, when it comes to savings, yes, women in general tend to save more money as a percentage of their income for most of their life. So that's also going to have an impact then on financial markets. And more importantly, women seem to be making systematically different decisions than men when it comes to investing their money, especially in terms of their attitude towards risk. But don't get me wrong. You cannot say that women always behave in the same way and men always behave in yet a different way when compared to women. For example, what we find in experiments is that as women acquire, let me begin with men. As men acquire more experience, more knowledge about how the financial markets work, they start decreasing their appetite for risk. However, the opposite is true for women. As women acquire more knowledge and more experience about how the financial markets work, they start increasing their appetite for risk. So women begin at a lower level of risk than men. Men are here at the top. But then over time, they tend to converge, right? So this is really important. And I always tell banks, I always tell wealth management companies and financial advisors that they need to study the behavior of men and women very carefully, especially now that more than half of the wealth in the world is owned by women. Next slide, please. In closing, in my last 3 minutes here before I take your questions or I listen to your comments, let me also tell you about how the global business landscape is changing as a result of shifts in global geoeconomic leadership. Next slide, please. If you go back 100 years to the year 1914, just before World War I, that's what the world looked like in terms of capital movements. The UK was, by a wide margin, the world's financial powerhouse. Now, next slide. If you fast forward about 60 years to the year 1967, then you get a very different picture, of course, after two world wars. The United States in 1967 is at its height in terms of its global financial dominance. Europe was still recovering, so was Japan. And as you can see on the map, China in the year 1967 simply wasn't even part of the global financial architecture. Next slide, please. Now we go to the turn of the 21st century, around the year 2000. Now the situation has changed. Europe has fully recovered. Japan also, although, as you know, it went into a stagnation in the 1990s, and China is starting to grow. And finally, next slide, if we use the most recently available data from about 2 years ago, I put together all of the European Union countries as one, then we see that we are in a very different world than 50 years ago when the US was dominant, or 100 years ago when the UK was dominant. Now we have four very important nodes in the world. We have the US, we have the European Union, we have China, we have Japan, and then we have India and Saudi Arabia also emerging. Next slide. But you see, we are going through very interesting times. All of us were born in the post-World War II world. That was a world in which the US was the largest economy. It was the largest trading nation. It had the largest navy, and of course, the dominant reserve currency, the dollar. But today, we already find ourselves in a very different world. China is about to become not only the largest consumer market, but also the largest economy. China already is, since about 7 years ago, the largest trading nation in the world. But the United States continues to offer the security through the US Navy, and as far as I can tell, still the world's most important reserve and international currency, the dollar. Next slide. I want to leave you with this chart because we tend to think that everything is forever, especially things that we cherish, things that we like very much, like perhaps the dollar. The world has witnessed tremendous economic growth. A lot of prosperity, a lot of wealth has been created in the world. Many people who were once poor are now middle class. And all of that happened while the US dollar was the dominant force in the world from the point of view of currencies. But let me explain what's on this chart. It may strike you as being a very complicated chart, but I think it's actually a simple chart that tells a very important story. It begins all the way in the left in the year 2003, and then it goes all the way to about a couple of weeks ago. And everything that you see on the chart is the value of currencies in Asia relative to the US dollar. If you see the flat line in the middle of the chart, that's a Hong Kong dollar, because as you know, they have a policy of pegging the value of their currency to the US dollar. The red line at the top is the Chinese renminbi. And the other currencies are for Australia, for South Korea, for Thailand, for Indonesia, for India, for all of those emerging markets in Asia. Well, at the middle of the chart, well, around the year 2008, 2009, you have a big disruption. Things go crazy. That was the global financial crisis. Before that crisis, all of these Asian currencies were trying to stay very close to the US dollar. But since the crisis, and especially since the year 2012, a very different dynamic has been occurring in Asia. Now currencies in Asia are moving around. They don't seem to be tracking the dollar, following the dollar. They're following somebody else. If you had the time now in this presentation to look at the chart more carefully, you would notice that when the renminbi goes up, most of these Asian currencies also go up relative to the dollar. When the renminbi goes down relative to the dollar, as has happened also during a few months in the last few years, then those currencies in Asia also go down. So in other words, most of these currencies in Asia are now tracking the renminbi, although the renminbi is very far away from displacing the dollar as the world's most important reserve and international currency. So what's going on? Something very simple. These economies in Asia have no other option but to track the renminbi, to dance to the tune of the renminbi, because China has become their most important trading partner. You see, before the global financial crisis in 2008, 2010, 2004, 2006, The US was still the most important trading partner for these emerging markets in Asia, but now China is. So now all of them are benchmarking against China. So, how is that affecting us? Well, it's affecting us because the transition has already begun. It may take 10 years, it may take 50 years. I don't know. If I knew, imagine I could make a lot of money. But we're going through a transition. Nothing is forever, not even the dollar. We better watch all of these things. But let me just end on this note 30 seconds. All of these changes are interconnected. I started with babies and I ended with currencies. All of this is part of the same big transformation that we're going through. All of these trends are converging, and they're converging to create a very different business landscape. Consumer markets, financial markets will be changed forever. And I strongly believe that companies and managers needs to start thinking now about what that world is going to look like in just 10 years from now, because otherwise they're not going to be able to be successful. So thank you again for inviting me, and I very much looking forward to answering your questions or listening to your comments. Back to Jose.
Thank you very much, Mauro, for a fascinating presentation and for really explaining all of these trends and how they're going to affect the future of business and how we should really be paying attention to them. I'd like to invite all of the audience to please post their questions on the live Q&A button in your screen, and we will be selecting some questions to answer, both from those presented by you, but also we might invite some of you to come on the stage to ask the questions directly if you so wish. So if you want to do that, also raise your hand in the settings. So please put your questions on the live Q&A chat room, and we will be handling them as they come in. So perhaps I should start with a question for you, Mauro, while the students are writing theirs, and that is, I find your assessment of the future of Africa fascinating, uh, because not only, as you indicate, is likely to be the largest population, but also it is developing at a very rapid pace and accepting and incorporating technology at a very rapid rate. How do you feel that this is likely to affect the relationship between the major countries and Africa? Because at present, we don't see many other than China, we don't see many countries engage very heavily in economic and other relations with the African countries.
Yeah, that's a great question, Jose. And Africa, I think, is going to become such a dynamic part of the global economy. And for the longest time, as you know, Europe and the United States had had a presence in Africa, first, of course, through colonialism and imperialism, but more recently in the form of investment. But you're absolutely right. Over the last 10 years, Chinese companies have become the largest investors in Africa. And they're looking not just natural resources. This is what has changed. Of course, they're looking for minerals and for oil. But in addition to that, when you ask Chinese companies, what are you going to Africa? They say, well, we want to participate in a future consumer market. They're anticipating there's going to be a large consumer market over there, and there's going to be many different kinds of opportunities. So I think it's really important for Europe and the United States, also for Latin America, to wake up and to take Africa seriously. And by the way, when we think about China as a leading investor, it's also, I think, fair to say that Indian companies are also investing quite heavily, but not throughout the entire continent of Africa. They're mostly investing in Eastern Africa, which, if you remember, has traditionally, about 500 years ago, being a part of that integrated trading region in the Indian Ocean. But here's the other thing that I want to mention, Jose, in my last 20 seconds on this question. I think business schools, we should be doing something about this. I think we should be not only reaching out to Africa and bringing more students, from that part of the world in anticipation of this big boom. So we should be essentially educating the next generation of African business leaders. But we should also be providing our students with opportunities to do internships in Africa, to launch ventures in Africa, to collaborate with African entrepreneurs. I think business schools can be a leading force in terms of, helping Africa develop, but also connecting the US, Europe, Latin America to Africa.
Very good. Thank you so much, Mauro. We have one question related to that, and that is from Siraj Fahad. And he says, how do we as Africans, individuals, gain access to first world opportunities when only the big conglomerates and organizations are perceived to be the ones who have access?
Well, I think there's two things going on, and that you have focused on the role of big business in Africa. And there's plenty of investments, plenty of activity by big business, both from outside of Africa and also from Africa itself. I mean, countries like South Africa, Nigeria, Kenya, Ghana, they have very large companies of their own now, both in consumer goods and also in producer goods industries, including even mining. So I think Africa is developing very quickly with different kinds of actors. There's also a wealth of entrepreneurial activities in Africa. We have now business incubators, and we have technology parks located throughout Africa that are producing really, really great ventures. But I want to perhaps turn your question into another distinction that I think is really important. As I mentioned earlier, 70% of the population in Africa lives in rural areas. And the temptation is just to pay attention to the big cities in Africa, which of course are growing, where you see the emergence of a middle class, where shopping malls are being built, and so on and so forth. But the bulk of the population is in the rural areas. And unless those rural areas develop, Africa will continue to be poor. And that's why it's so important to invest in agriculture, in improving the productivity in agriculture, to find new ways to create surplus production, to commercialize that surplus production so that incomes in the rural areas grow, to add technology into the mix. So I think the future of Africa is both in the cities and in the countryside. And in response to your question, is also in big business and in grassroots, more entrepreneurial kinds of businesses.
I have a question from Anastasio Papanagioto, who says, thank you for an amazing presentation. My question is, how do you see the other global challenge, climate change, affecting the transformation you describe?
So I always, yes, I'm sorry, go ahead.
No, because there's another related question to that, which is from Eric Leite. He says, what is the role of sustainability and its impact on the global consumer and financial markets of the future?
Yes, and I intentionally left climate change and sustainability outside of my presentation because I knew that there would be a question. And I was predicting that Jose, of course, would pick that question from those coming into the chat. Look, I have devoted a lot of attention to that in my book. I have an entire chapter on it. It is a very important problem that we have in the world, and we need to address it with every tool at our disposal. New technology, especially in the energy field. But more importantly, and for me, this is the big argument here, I think we need to change as consumers. I don't think the problem of climate change or the problem of biodiversity, the problem of plastic contamination can be solved just through technological change, through investments in new technologies. I think we need to change as consumers. We are so wasteful in our consumption that we're just multiplying the problem many times over. In the United States, which is arguably the most wasteful country in the world, for example, 30% of the food that reaches the consumer's table gets wasted. And as you know, the production and distribution of food is a major contributor to climate change. So I think we need to change as consumers. We can't just wait for major technological breakthroughs, for major new investments in the green economy or the circular economy to take place. And I think in so doing, or in order to accomplish that, business needs to be so much more engaged. Businesses, I think, need to innovate in terms of greener products, green containers for those products, try to cut transportation costs. I think businesses should be leading. And quite frankly, every consumer survey also reports that, especially the younger generations, they're willing to pay more money for a product or a service that is more environmentally friendly. So I think there's also incentives. In other words, you can make a business case in favor of green products or the circular economy. And I very much hope that businesses lead the way in terms of making consumption less wasteful by rethinking products, by making them simpler, by reducing packaging, by reducing transportation costs, and so on.
Let me switch to themes here now. I have a couple of questions regarding human resources. One from Catherine Gillette. She says, "Thank you for an incredibly interesting insights in your talk, but I'd like to know how you think our approach to talent development, starting with tertiary education to further career development, has to change fundamentally in order to enable the skilled workforce of the future."
Thank you for asking that question. So I alluded in my presentation to how I think the sequential model of life is doomed. It's going to come to an end. We're going to go back to school several times. So, in other words, the demand for education continues to grow. It continues to grow, well, because we have more people in the world, and because people have realized that knowledge is really important, because that's what's going to give them good opportunities in the labor market. But the demand for education will also grow in the future, because people, even those who have had 20 years of schooling, will want to go back to school. So while the demand is going through the roof, the demand for education, the supply is actually very, very flat, it's very rigid. And so I think we're going to see a revolution in education, in particular in business education. And technology, digital platforms, blended models of both in-person and online education, they're going to proliferate. They're going to be really important in the future. We're going to see a revolution in this. And the demand for knowledge is, I think, one of the distinguishing characteristics of what's going on now. And let me just end my answer here, Jose, with something that is really, really important. Companies routinely say that they advertise jobs and they cannot find enough people to fill those jobs with the required skills. So, in other words, we're not doing a good job at universities, at business schools, in general, in the education sector. And that's why we see so many startups. That's why we see so many, in some cases, large companies, like media companies, also getting into the business of education. That's why we see in some parts of the world, especially in Europe, so much private equity activity, meaning private equity companies or firms purchasing private for-profit universities and turning them around. So I think the person who has this question has put her finger on something really important, which is that expect a lot of change in the education sector in the next 10 years, because once again, we have this huge mismatch between supply and demand.
Thank you, Mauro. We have 1 minute left, and there's a number of questions about income distribution having to do with the fact that poor income distribution in India and in Africa may slow down the process of growth and development we're mentioning. Do you have anything to say? You only have 30 seconds on income distribution issues.
Yes. So it is growing, unfortunately, in most parts of the world, but for different reasons. I'm more worried about the increase in inequality in Europe and the United States, because it is producing a lot of political tensions and frictions. I'm not so worried, although it's important to keep in mind also in places like India or Sub-Saharan Africa, for a very simple reason. When you have the middle class growing, but you still have poor people, then inequality increases, at least for a while. But we need to be watchful. We need to continue to bring people out of poverty in those parts of the world into the middle class. So I'm not happy about the evolution of inequality, but I think the picture is very different when one looks at Europe or the United States on the one hand and the emerging markets on the other.
And do you think that, for example, as Archie Dole asks, do you think the impact of companies searching for human resources worldwide would have a major impact on unemployment in developed countries, and as a result, create a strong political backlash to this process that you're describing?
Without a doubt. So technological change and also offshoring is going to produce unemployment, especially in Europe and the United States. And if we continue to ignore that some people lose from these changes, then I think, as I said earlier, we're going to see more political frictions, we're going to see more populism, we're going to see more political instability. And so we have to take care of those people. And perhaps the idea of a universal basic income is something to be considered more seriously.
And what do you think is going to be the impact of cryptocurrencies on the emerging market?
Well, just in 10 seconds, I think the future is not in cryptocurrencies, although my students tell me that I'm too old to understand the potential of cryptocurrencies. I think the future is in smart contracts, which is like even one step further from cryptocurrencies. Smart contracts include cryptocurrencies, but they also include, automatic clauses. In other words, it means that transactions would be so much faster. So I think the future is smart contracts, including cryptocurrency, not just cryptocurrency.
Well, I have one last question for you, which is from Neil Anderson. He says, "Good afternoon, Mauro. Although we see Africa becoming," he's in Africa, Neil is from South Africa. "Even though we see Africa becoming a very large market, how do you see economic policies in Africa changing to allow this change to actually materialize in a positive way? It is easy to get money into Africa, but it's not easy to get money out of Africa."
Yeah, great question. And look, for me, the single most important thing about policy making in Africa right now is to not only focus on the cities, focus on the countryside. That's where most of the population is. And unless we can improve agriculture in Africa, and it has already been improving, unless we can create jobs in the countryside, then I think growth in Africa will be very unequal, very imbalanced, and it will benefit a few, but not everybody. So I think that is the key. The key is to have policies that will improve conditions, not just in the cities, but also in the countryside.
So you don't think it's too late for the demographic dividend to be earned in Africa?
Oh, absolutely not. Africa has a young population, and that should be a great positive resource for the future, as long, of course, as you can educate it. That's another big challenge right now, to educate that population, that growing population.
Well, thank you very much, Mauro. As usual, it has been fascinating. I'm sure that, as you saw from the interesting questions, it raised a lot of very positive reactions. And we're delighted to have had you. We're very thankful for your presentation. And for those of you who missed the beginning, please, you can find the recording of the session if you want to go back and listen to it again, as it will be posted, as all the sessions in this program will be recorded and made available to all the participants for you to rewatch them or watch them asynchronously. So again, thank you very much, Mauro. We wish you a lot of good things in your new job in Cambridge, and I hope that I'll come and see you soon and share a a nice meal with you, like we did in Miami a few weeks ago. All the best, and thank you all for being here. And with that, I will hand that over back to David and see if do we have anything else to do today, David. I guess the answer is no. So, And I want to remind you that tomorrow we'll start again with a series of sessions beginning early in the morning, our time. I think the first session is at 1300 UTC. So we all hope to see you at that hour tomorrow for the first session of the program. 1200 UTC. I am being corrected. Okay, wonderful. All the best. Thank you so much. Bye bye.